Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, and we're at the 18th of October, 2023, and the time right now, 6:15 p.m. Central Time. So we saw an attempt by President Biden running over into Israel. Unfortunately, with the bombing of the hospital yesterday, other foreign leaders didn't want to meet. But he did promise $100 million for residents in Gaza, Palestinians, not the Hamas, but the residents there. And at the end of the day, as he was flying home, the Egyptian president has decided to release 20 truckloads of necessary aid into Israel from the Egyptian border. Now, obviously, there's a lot more trucks there than 20. I think they want to see how things go, how it gets dispersed. Are there problems? What happens when the gates open? There's so much to be looked at. It's a moving target. That in itself is enough to give a little bit of a pull back into the metal market. So you're pulling back into the gold, the silver. I mean, anything that says maybe there's a ray of hope that peace is around the corner is going to be looked at that way. I think we all realize this is so fluid, trying to guess it is an impossibility. The thing that keeps bothering me, and you have to be bothered by it, is we continue to see the never-ending march up in higher interest rates. Every day that goes by, it seems that the U.S. Treasury is putting out another $60, $100, $120 billion to be auctioned off. The rates are coming in crazy. You're at 5.35 on a 4-week T-bill. That just gives you an idea. I mean, this is pretty crazy. So the rates keep going higher. Mortgages coming down, not the rate. The amount of mortgages being taken out keep getting smaller and smaller, approaching decade lows, interest rates at decade highs. It's that simple. So as we take a look at the markets, let's go to the gold and see where we're at. You're maintaining the differential on a weekly chart of gold-silver ratio, where it's still staying over the 18-week average. I will keep the chart when that happens in gold. It means I'm thinking I'd rather own gold than silver. When you're under that, we'll move it to silver color, saying that we'd rather own silver. The daily chart was flipping back and forth on that today. It was interesting. We still have a gap left in the gold chart from down here when the war began for all purposes, and the market is done this time around what a traditional gold rally is about, people running to it because they don't know what else to own at that point in time. Well, I can tell you what has worked. What has worked is the gold market. What has worked is owning interest rates. In other words, high rates, being very short in the yield. And what has worked is being long the dollar. When we take a look at the swing line, you still have patterns on it that are higher lows, higher highs, bullish. The market is over the 18-week average and has been the better part now of almost a week and a half, but you're in serious resistance. I mean, I know that emotion takes over and you go, Ira, you don't understand. This is it. This is the war. It's just going to run forever. Nothing runs forever. And if you don't approach your charts away from your emotion, you get caught up. You get caught up often in the wrong way. Are you going to catch the top in the market? You are not. Are you going to get caught wrong in the market? Well, in a war environment, most people don't want to be short, so that's hard to be short until you see at the very end where this thing can at least pause, stop, whatever you want to call it. I don't think we're there, but I'd love to be. But you've hit your 100-day average. You're running into resistance. The next main moving average is 1982. And if you look at the Bollinger Band, you hit it for the very first time today since all the way back here at the beginning of September. Now, it doesn't matter to me necessarily what you think. I got to do what I think. That's why it's my show. And I would be telling traders, you have no choice but to what? Be coming out of the market. You're not embedded. You're up at a Bollinger Band. I know I'm going to hear from people, if I get out here, I can't get back in. That, number one, isn't true. There's nothing to stop you from taking that button on your computer screen and hit the B or whatever it does on your different piece, and you own it again, all right? That's simple. But when you take a look at charts, and that's what this show is about, is charts, That is a resistance zone, and the market could easily get a correction. That simple. Here's the daily version of the gold silver. And you can see I've kept it in gold. This morning, I actually had it for my subscribers in silver because silver was stronger than gold early on. Now, as I'm looking at silver, the market coming up through here, running into its key resistance, the 100-day, 200, and a Bollinger Band. So I know that I'll get people going. It's just going to keep going. And Ira, you're going to $30 here or even higher. I know. But that's not how I'd be approaching the chart. So you know. I'm trying to be cute there, but it's the simple fact. This is a wartime environment. It's an environment where interest rates in the United States are running to highs we haven't seen in many decades. Are you playing the interest rates? Are you playing the war? Are you playing the strength? You heard me, the strength in the U.S. economy. Economy's not weak, it's strong. Today, they came out with a piece of news. I was reading it from the New York Federal Reserve. The average student, I think there's 28 million debts that are on student loans. How much do you think the average monthly payment is? Because we've all been told, including me telling you, they're not going to have money. All right, they got to pay. I thought they'd be paying $300 or so. $56. That doesn't really drain the average person on the street. Just got to tell you, I was surprised at the smallness of the number. And their report came out and said, yeah, it surprised them, but that's what it is. And therefore, it's not the event. And that's how they came out with their report today. And I've got that included in tonight's full research report. I talk about that in the market. Very interesting. Okay, it's crazy. All right, and the copper, a lot of resistance here. Now, copper's interesting. China's GDP came in stronger than thought, and their current production is better than thought. They have a nightmare, and that is the right adjective, a nightmare in their private real estate market. Defaults are happening right now. You got Country Garden, you got Evergrande. Are these companies going to be the domino that trips over everything? It could be. So, got to keep your eye on that. But the government on its own is trying to give us the impression they're going to do something for the general economy, not for those companies. At least that's what I'm thinking. I'm waiting. If copper gets over the 18-day average, that would be the first sign that the market is getting better, that more demand is coming. We have to wait and see if that is the event. Right now, the bias is still down. In the platinum market, you had your bear market rally off the lost embedded reading. Today may have been where the market just said, I'm done. I'm not going to be able to make it to the upper band. I'm going to pull back there. And in the dollar, I think that if the dollar clears this high right over here, the 86.56.5, you're back into that higher low, higher high scenario. But look at how the Bollinger Bands are narrowing in and how the market is suddenly not making new highs or lows. This is a difficult market. When I tell you difficult, it starts with a capital D and then goes to all caps, IFF, all the way through. This is not your mother's market, your simple market, or for you women, your daddy's market. I'll be fair with it. This is difficult. So trade very small, trade light, hit and run. This is not a position trading market. The positions have happened already. The gold's moved. It's past tense. If you think there's another $100 in it, that means you must think there's a real catastrophe coming out of the Middle East, and you may be right. Nobody knows. But as for the things away from the Middle East, things here don't warrant gold where they're at right now. So this is a Middle East event, and you got to keep your eyes on that. We talk about this and so much more in the different research we're putting out now. And believe me, we're putting out a tremendous amount with charts every day. We have upped at the Linn the amount of chart action we're putting out. They're called price count charts, and we're giving you ideas where markets might be headed, why they could be headed there, the chart point behind it. And then we back everything we do up with writing about the options markets, the spreads, what are they doing in the markets, the cash markets, what are they doing? We're known for our grain acumen. If you're a grain trader, this is the time of year you want to see what we're saying and what our seers, so to speak, have to say about the market. Our special reports, we seem to put one out every week at this time of the year, and that's what you try to do. So how do you get this? Because we'd like to put it in your hands and show you what a real commodity firm does, whatever you think real means. You go to our website, go to free offers. You'll see all the offerings there. Choose one of these and add whatever you want to it. Move your cursor to the top up here. You'll see an icon. Give that a click and away you go. I'm Epstein. I'll see you tomorrow. You have a good evening.